Well, Lupin is the big stock on our radar this afternoon. The company has failed to meet investor expectations yet again. The revenues and profits fell short of the sales, and there has been a rising pressure in the US markets as well. Ekta caught up with Ramesh Swaminathan of Lupin to find out more. Listen in.
When you talk about India, you would always recognize that Q4 is tad lower than Q3 because it's the weakest quarter, so to speak. In America, we had guided for close to about $200 million, as a run rate. But things have turned out to be a little different. Firstly, because the fact that there was this losartan recall, essentially because of NDMA impurities. Because of that, we had to, we couldn't sell. There was also a recall. Both went to the top line. There was, of course, price erosion, which happened on a number of products. Brovana came down, and so did, in fact, a host of other products, including levothyroxine and so on. In a general sense, the OSD business in America is facing a lot of headwinds, and that's what we were seeing. And that's actually evidenced in our results for this quarter as well. When you speak about albuterol, we continue to do well. The market share is close to 23%. But I'd also guided for, in fact, lower margins, in fact, for the up to perhaps the first half of next year. It's only in the second half do you expect margins to kind of perk up. There are a lot of initiatives that we are working on, and all of this will bear fruit only from Q3, Q4 onwards. Our inability to kind of improve the margins is actually, squarely to blame is essentially lack of new products. We have OAI facilities across quite a few of those, and whilst we have close to about 110 odd products that are pending approval, until those come to fruition, and plus, of course, the pretty intense pipeline that we have across a lot of complex generics, which includes the inhalation space and complex injectables, we would have some issues insofar as the overall top line is concerned in America.
So what would it be then? For example, what would you guide in terms of margins? What would you guide in terms of a margin range? And can we see more impairments? Because a lot of companies have continued to see impairments simply because of the pressure that we've seen in the US generics business.
The impairment that we have taken, this is essentially relating to Gavis, so it has not performed in line with our expectations. We had to take this impairment insofar as products that we're not bringing to the market from that particular stable of products that we had bought there. The margin pressure is going to continue for a couple of quarters, but as I said, from the third and fourth quarters, once we get newer products in, we would expect things to perk up. For instance, in the third quarter, we expect Suprep to be launched, which already been approved. In the fourth quarter, we expect PEG-GCSF as well as, in fact, Spiriva, and things would actually look up much better from there on.
Okay, so just give us a number for the margins then, or a range. Is it going to be sub 10% for the next 2 quarters as well?
The next quarter is perhaps more or less the same range as the current quarter. Things would look up in the second quarter. Third and fourth quarters, we would see it stepping up quite okay. And the fourth quarter, we would think that we would be much better off.
Okay, so the previous quarter, the guidance was 16% margins in FY23 and probably 20% in FY24. Would that 16% then now stand revised, lower?
The first two quarters, it would, so essentially, the closing run rate for FY23 could be in the vicinity of 18%. FY24, we still stick to the core 20-odd% guidance. But that, as I said, is, again, it's going to be a function of the kind of products that we bring to the market.
Okay, so you're expecting a significant acceleration in terms of margins probably in the second half of FY23. Can you tell us what the pricing pressure was this quarter in the US? Was it in double digits? Was it around 10 to 15%? Because that is what the estimate is now.
In a general sense, it is actually because of two reasons. There is price erosion on the OSD front. There was, of course, Brovana, which also price fell off during the course of this quarter. Whilst, that's insofar as the, selling prices are concerned, but there has been pressure on account of inputs as well. There is, of course, inflation raging across. It's secular across industries and certainly in the pharmaceutical sector as well. That's impacted our margins somewhat, about 1.5 percentage points, I would say.
Okay, so what is the price pressure that we can expect for the next 2 quarters? Can you give us a range there?
We expect things to ease off from September, but the price pressure is certainly going to be there for the first 2 quarters. I could go into a number of economic reasons why this is the way it is, but that's for another day. I expect things to ease off, as I said, in the second half, but the first half is going to be an intense fight.
So you're probably not going to do $200 million in terms of quarterly sales for the US in the first 2 quarters at least?
Yes, that's the expectation.
Okay, so would it be within this range of $180 million that you did this quarter?
Yes, I would say perhaps a tad lower, but around that you could say yes.
Okay. Albuterol, you did not manage to pick up market share there. Is it stagnant there?
It's close to 23%. We have been ramping up. It's about 23% right now. It's doing pretty well for us. In fact, that's the most important product amongst the products in America today.
I just wanted to come to the diagnostic business then, because that's just started as a business for you all. What is the EBITDA level and what is the bottom line for the diagnostic business? I know it's small as compared to your overall size of operations, but is it profit making on the EBITDA as well as the profit level?
Victor, you recognize that there's never going to be the dominant theme. So even if you're speaking about potentially, about 5 years down the road, if the India business is going to be 10,000 crores, you would expect the diagnostics business to be close to about 500 crores. That's 5%, so to speak. It's currently very, very early days. Our current turnover is, perhaps, a few $1 million, so to speak. It is very small. It is loss-making because obviously the break-even point is yet to be reached. It would be possibly a year or two before we get to that point. And we do expect, given the fact that it's a fragmented market, less than 16% is actually in the unorganized sector, there's tremendous scope for potential, there's tremendous potential for growth out there. And that is what we are there to kind of exploit.
Okay. Somerset facility that received 13 observations, 5 of them are repeat. Are you expecting it to probably escalate from the current status that it has? It, I think, has a warning letter.
Well, there is a warning letter and there are 5 repeat observations. We are a little disappointed with the way things have actually panned out at Somerset. We're working on it. It would take some time before we actually get it off our chest, so to speak. But it doesn't actually disturb anything for us insofar as launches are concerned. So soup prep is very much on the cards, and that's going to be our most important product for the current year. Going forward, obviously, we would work on, in fact, the overall observations and see what needs to be addressed on this. And
when can we expect any kind of re-inspection for plants such as Mandideep as well as Pithampur Unit 2?
They've started inspecting, so as you would have recognized, so Goa is off the hook. We had, Tarpur also. We had the audit completed. The next on the cards would potentially be OSD facility at Pithampur and then Mandideep. We're fairly confident about our ability to come out of all of the problems insofar as India is concerned. But Somerset might take a little more time.
All right, from one management to the other, what we'll do is take a short break. On the other side.